So on day 20 of the competition, the third week of the competition, it started to get really, really interesting for me, purely because I came off of the back of two running positions over the weekend. Not something that I do often, but knowing this, knowing that it is a competition, knowing that I'm allowed to play quite aggressive, I managed to hold these positions over the weekend. We got a really nice open on Sunday evening, right? Sunday night, pretty much. And we got presented pretty much the same play, but better, even better on that opening. I'll show you exactly what it is. Again, look at your Asia range timings. We are only on M15. So what we're doing here, we're not doing our textbook H1, H4, tapping into a higher time frame array, but we are so close to our main draw on liquidity, pretty much our interim draw on liquidity now, because this becomes previous weekly levels. So there's some sort of significance to that. And I'll showcase you guys exactly what I did when it came to extending my TP and why I'm allowed to do that. But simple. Asia range timings, you can see just this candle right here becomes world's most perfect shift zone. Doesn't get better than this. You don't even need to get into M5, right? M15 overlap with a shift zone with an imbalance. You can see that we nearly got the midpoint here. So again, you ask yourself one of two things. Where do you want to enter in this position? For me, it's very, very simple. I would like to be in this position rather than being greedy and going into more better RRs. So for me, I'm just off of pretty much just the base of this shift zone and running it to these lows. Again, you can see 22 pips. For me, that's 22% gain on the competition if I shoot this with one lot, which is exactly what I did. From here, it's not rocket science, right? Price takes out buy side liquidity, in this case being Asia high, right? Not difficult. Leaves behind an imbalance, intent, overlapping with a shift zone. Boom, we close, body close in there. You get so many opportunities to enter the market, and then voila, it just goes. E2 continuation play right here, SL above the shoulder as such. And that was my second pyramid right here. I held it here because this was exactly the moment where I realized, okay, look, these are both negative RR trades. You can kind of see that, right? That's how I pyramid into these positions, allowing myself to kind of keep my risk minimal and having these gains kind of drip the bucket in that sense. And that's something that I'm quite fond of, especially if you're playing competitions, if you're not familiar with competitions, right? Understand the rules. I'm not allowed to do excessive pyramid, so I can't be pyramiding the whole leg, which would entail like trading every little body close that there is. I'm not allowed to do that, I think. So I'm just keeping it with simple, right? 2 to 3 positions in one idea, right? Because otherwise it would be unfair. And also with my margin, even with 1 to 1,000 leverage, my margin doesn't let me shoot that many lot sizes, right? To manifest the goals, the gains that I would have wanted. But let me showcase you guys exactly when. So we look at order flow, we look at a couple things, right? We know that on that Friday, when the market closed the week before, we created some form of low resistance liquidity right here. There you go. Had to just showcase. All of this is considered low resistance liquidity. When we closed below that level, you want to see one of two things, right? You want to see some sort of array being created, whether that is this one being respected, but the issue was we had no follow through here, right? And then this is where it was very, so I understand this. I have an alert set on this level, right? Because in this distance right here, from pretty much my scaling to this level, I want to make sure that there is some sort of intent or some sort of, let's say, actual, like good, respected bearish arrays for me to extend my TP. And that's exactly what happened. So unfortunately, it wasn't quick enough. These two got closed at this level, right? Which was unfortunate. But right when we created this imbalance and we had like this move being created, I was quick enough to open these up, just like that, right? And then you ask yourself, where are these going to? Very, very simple. you go to the previous low of that day, previous level here, pretty much this entire level. That is what we were looking at. And you can see that that gives me such a significant boost. You already see kind of the spoiler of the next day, which is unfortunate, but these are then the moves that you do. So don't go for external targets. You know, it's not rocket science, right? If you targeted previous weekly low from a Thursday on a Friday, from a Monday, pretty much going into that most recent low that was printed, then do that, right? Then from there, you go into the other one. Right? You don't go into stuff that is not there. If you make it easy for yourself, if you're executing on ETF, you're executing on M15, don't start looking into like H1, H4 to find pockets that are miles away when they don't make sense on your ETF, on your execution time frame, right? That's just not the way that you should be going about this. So everything I do is on my ETF, is making sure that I exit on these levels. You can see this overlaps one more time with that BPR that we had noticed. That was a great area, and you can already see the results of the Tuesday, where that leads up to. So I'll see that and explain that in my next video, but this is pretty much the result. Very, very clean price action, right? If we just hide these for a second, you can see pretty much where this all comes into. So that's this. You can see beautiful, this imbalance being respected right here. M15, right? We're not going into M5, guys. We're not doing anything crazy in this entire competition. You guys have seen me go into M5 like only a couple times. I can count on one hand how many times I've gone into M5, and those were the riskier positions. Those are the ones that actually bit me back. So here, order block, right? You can see that this just gets respected. You want to see this order block follow through. It does exactly that. And this is obviously where people will start looking for longs. And this is where you will understand, hey, we took out previous daily low. There's no shift here. Your shift becomes the invalidation point of that scale in. Price respects bullish order flow for a bit, right? And then creates bearish order flow. And that allows you to open up your TP to the downside, right? Simple as you're doing order flow, you're doing liquidity concepts. You don't need to be mechanical. The mechanical aspect of trading is very, very easy, but that will put you into let's say the wrong areas where you want to make sure that you're not just blindly doing an execution pattern, but you're actually following liquidity concepts and order flow. So if that makes sense, please make sure to stay tuned, and I'll see you guys in the next video.